Friday, March 24th, 1:03 p.m. New York time. Good afternoon. This will be a recap of some day trades I've taken during the week. Let's do a top-down first. Look at the cash index of the S&P 500. That stock symbol is SPX, Sierra Papa X-ray. Top-down, me using the higher time frames and working my way down to the lower time frames, also referred to working down to the faster time frames. I have three grids here. On the right is the monthly, the middle is the weekly, and the left is the daily. Opening up the monthly, this whole chart represents 5 years. Each candle represents 1 month. Well, the current month is not done yet. Still see a lot of price action. Zoom in. Current candle for the month is red, making a lower high than the prior month and a lower low than the prior month. Look at this little tiny body. Indecision. That's what that means, indecision. It's also here in a huge consolidation. Down here is the demand zone. Up here is the supply zone. Demand zone because prior buyers were here. And look, they made higher lows. That was bullish. We're up here. Supply zone, sellers. Big wick on the top, rejected it. Never did a full retest even of this huge wick. So that's where it's sitting, between a supply zone and demand zone, below that big round number of 4,000. Also still below the year of the high and above the low of the year, which that first month was an inside candle. Note, the end of this month will be the first quarter of the year. 3 months, 1 quarter. Yep, the ending of that quarter has big meaning to institutions and individual investors that want to rebalance their portfolios, get rid of garbage positions and add on the good positions. A lot of that will be occurring the last few days of this month and the first days of the new month. Let's go look at the weekly. So since today's Friday, this market cash index will close at 4:30 p.m. New York time. Look at this trading range. That's the high. That's the low for the day. Yep, it was all the way up here. Currently, it's a higher high than yesterday and a higher low than yesterday. That trend is up, retracing this big bearish candle. Yep, that's what one expects when you see a big bearish candle versus a very bullish one, retracement. That's what's done. It's almost done 100%, but no, totally. It also finally broke above that midpoint. Yesterday, tested it. Today, it broke above it, rejected it. Again, the day's not done yet. We'll see how it goes. It's that weekly candle. Into the daily now. Look at the daily. Lower highs, lower lows. Right now, it's forming a bullish pin bar. Just sitting below that 39.50 level. Big round number. Double zeros and 50s. Big round numbers. Supply zone up here, demand zone here, also a demand zone here. Yep. What an interesting week we had. So today's Friday, green, Thursday, red, Wednesday there. So the high of the week was Wednesday. Then you had Tuesday, which gapped up. See that blue river stream gapped up above it, got filled on that Wednesday. And that Monday and that Friday last week, 2 inside candles. Very interesting. Inside candles. You don't see too often double. So here was so much energy, it gapped up on that Tuesday. And then it used up all that strength and blew off its top Wednesday and sold off Wednesday. Let's go now to look at the 15-minute chart. Past 5 days. There we go. Looking at the cash index. Each candle is 15 minutes. Past 5 days. Show you some trades. Again, we identified Wednesday was the high of the week. These blue horizontal lines, they represent the low and day of the prior highs. So for instance, here today, Friday, this blue horizontal line was the low of Thursday. And this blue horizontal line was the high of Thursday. And then the yellow horizontal lines are 8 deltas at the market open 9:30. Yep. Let's adjust this to get them all in. So this day, I did not get to do it. So right now, neither side, neither 8 delta was tested. Yesterday, Neither one was tested. I don't know about Wednesday. Tuesday, neither one was tested. Monday, the call side was tested. Yep, the top of the calls, the bottom of the puts. So Monday, the top one was tested. And then that was the prior Friday. Well, 8 delta, that's what these are. The 8 delta is a 2 standard deviation. 1 delta is a 16 deviation. So the 8 delta being the second deviation is further away, a lower probability of being tested. And you could trade options on both sides of these, make money on both sides or one side. You can also have risk on both sides, such as financial instruments have risk. So today, I did a bullish trade. Yep, a bullish put trade. And it closed green. Yesterday, I did a bullish trade and it closed green. We're looking at today. I placed this trade at 954. Did I? 954 was it 1054? Yep, 954 I placed the trade at. So my short strike was a 32 delta. Yep, that was aggressive. And it was 5 strikes wide. 5 points wide. Like the $1.15 premium for each width. Nice. Went up and closed it. Closed at 1034. Thank goodness. Yesterday, same thing. Like I said, bullish. Got in. 1002. Closed it. 1037. So less than an hour in that trade. And this one was less than an hour. So both of them less than an hour trades. That's good. And notice also around the 10 o'clock time frame, 10:30, you see a lot of my trades are placed because there's so much volatility doing these option trades. I may not get a good fill. So what I'll do is prior to that, if I'm going to trade, I'll be scalping just the outright futures contract, ES or the MES. Notice here too, these gray horizontal lines are just representing the short strike. I'm going to zoom in so you get up, zoom in a little bit more so you can see something here. So today, this second green candle, 15-minute candle, when it got completed, I liked it because it made a lower high, lower low. I liked it being bullish because I had that huge wick. The red candle, zoom in some more. The red candle had a wick there on the bottom, but mostly body being bearish. But because we broke below it in the second 15-minute candle, making a lower low, lower high, and closing that way, huge wick on the bottom, and we closed green near the top of that second 15-minute candle and above midpoint of that first 15-minute candle. To me, that was bullish. Yep, I liked it. Then you have this huge consolidation that was occurring here. Yeah, you went above it, went back down, down here, down. Didn't break that low, which is great because I had my stop below that. And then we had this inside candle, nice for another opportunity to trade, but I had already shut down. Inside candle, solid, hollow body, equivalent to a green. Nice entry there. If someone took a trade there, any financial instrument with the S&P 500. Futures, the stock, the options, nice. If you did the bullish, nice run up. So as soon as I got filled, I had a working order to close 50%. But because this starts to sell off here, I closed early. I think I closed it for 40%, 41%, something like that. So I didn't make my 50%. I didn't lose a trade, still made money. Happy camper, got out. And good I got out because looking here, it made a lower low, being risk of getting stopped out. So worked out well. And then now, look at that, it's higher. So I would have kept more profit. Going here, Thursday, I like this big green candle. I was waiting for a retest. And this one, it didn't come back as I wanted. Let me zoom in and show you some more. So when you have these big candles form, yeah, I know these are bigger candles, but this was a big candle as well too. I was looking for near a midpoint to be retested. I was bullish and looking to enter during this 15-minute. I was waiting for a deeper pullback. It never came. The bulls were so strong, but I rather had a deeper pullback showing that there was confidence to shake out the loose hands coming deeper in here. And then the buyer stepped in. So I'm sure I'm not the only one that missed out of buying at that point. then when it got done, higher high, higher low, we had a breakout above here. I liked it. So that was my long, went long, nice. But here, as soon as that got done, I see this red candle forming. And I was very concerned I may have to close my trade, either for a small profit or for a loss. So I stayed in the trade still. It closed. Look at that. Big wick, top, bottom, and a small body. That's a doji. At the top of a trend means indecision. Indecision. Also, sometimes it could be followed through with a reversal. I was like, uh-oh, I'm taking on some heat. Not cool. Got done. And the next candle, look at that. Inside candle. So when that was completing, I was like, oh, excuse me. Sorry. I was thinking, yep, this is going to be a consolidation and maybe a fast sell-off. So thank goodness I got on my trade. Closed it at, did I say 1037? Closed at 1037. And then this new candle, 1045 came. Look what it did. Explosion, takeoff, huge move up, impulse move up. Yeah, left a lot of money on the table. Again, happy camper where I closed, still made a profit. But again, doing the right thing, money management, very important to stay in this business for a long time. Many people come with huge amounts of money to start trading, day trading, swing trading. But good money management could take that away in 1, 2, 3 years. You can have a small account. Good money management can keep you in the game a long time. Anyway, you can have a small account, big account. Bad money management will eat you away. So look what happened there. That went up and that went up and then roll over. Let's go on to the next. We're going to look at the ES. S&P 500 futures. Monthly. Same thing. Big, huge consolidation from the end of last year to now. Very strong because this is a lot of energy being built here for some potential trend breakout, which we might see a trend like this. We might see more retracements with inside here, but as this builds more consolidation, see, look at this, all consolidation here, and then the energy to the upside. So I'll share with you this. There's many knuckleheads that are elected officials of many political parties. Might be one of the political parties you are favoring or one of the political parties you hate. You also have media that's spreading disinformation. Well, I'm telling you, history on charts don't lie, but people lie. Massive consolidation here. It's either going to break out to the upside or downside. Broke out to the upside. So we have massive consolidation here. A lot of energy. And again, we will have a breakout one way or the other. Many people will get in late because, again, they will be believing fundamentals alone without looking at prices, which I'm showing you prices. Look at the weekly. Look at this wedge. Look at the daily. Supply zone, demand zone. Let's take this into the 15-minute so you can see scalping. If you want to do outright futures or outright stock. This green area is the Asian section, 2000, 2300. This is the London session, 0200 to 0500. Get 15-minute candles. And we have the New York session. It starts at 9:30. Well, it starts at 8 o'clock, but I don't highlight that because I'm trading during that session. I don't want to have too many different colors. So the point was this morning, and also label, see this blue horizontal line, that was the low. Let's zoom out more. The low of yesterday, the high of yesterday, blue horizontal line. A lot of stuff I draw here because I'm looking for potential trade ideas off of those. Zoom in. And then see this white horizontal line, that's the opening price overnight. The futures open 6 p.m. New York time. Asian session opened there, went lower. London session went above it and then sold off. And then the 8 o'clock to 11 o'clock being the big New York session. Let me zoom in and show you some. Huge, oops. Let me put this back. There we go. So I labeled this because, again, we were down. Come 8 o'clock this morning, we were trading below the London session. I labeled the low of the Asian session, low of the London session. These orange horizontal lines right here, London session, Asian session. Yep, the market's still open. That's why you see prices are moving. The market will be closed here shortly. So that being said, looking here for setups on the higher time frame, but I'm doing entries on the 1 minute. Higher time frame gives me a lot of overview of what's happening. Massive consolidation here from 6 p.m. 8 p.m. made that low, which happened to be the low of the day. And look at that. That was that low of the overnight. So notice big wicks up here, lower highs, lower lows. Yep. Discerning. Well, that could be easy to misinterpret what's happening here. So again, I'm looking at these price levels for retest to see what happens at that particular point on the 1 minute, set up here on the higher time frame. So when this was occurring, I was drawing, that's off the 1 hour. So this was at the 1 hour. I was drawing the demand zone. And look at what happened here. We had a nice retest of it. Very nice. You'll see this in the 1 minute momentarily. Just want to show you. So again, most of this pre-market before 9:30 a.m., that 39.50, that big round number in red, and also the daily low of yesterday. Yep, that was the opportunity to say every time I was hitting that, look for opportunities to be shorting, because that was defined as being sell-off. Didn't have it defined of buying because the momentum was to the downside. Had no proof that I saw that said, hey, we want to go anything as strong bulls. So just looking for shorts at these key levels. And then look at this inside candle there, long wick, higher low. And finally here, this candle, 8:30 to 8:45, green, closed green, higher high, higher low, nice. Give me confirmation, a reversal, and this huge impulse move up right here. This green candle, that was 8:45 to 9 o'clock. The confidence to be bullish because we took out all this. We broke above that and closed above it. I saw a shift in buying power. The bulls were coming in. So then looking for retracements to be trading bullish. Had several of them occur here. Nice. Remember, I already knew this was the prior demand zone. And then coming into that early New York session when we were open to 9:30, that London low was a massive resistance area. And eventually we broke above it, got in here. Let's put this on the 1 minute. Zoom in. Take it to the 11:30. Zoom in some more, take it to the 6:30. Take it to 11, right there. There we go. On the 1 minute, same drawings I did in higher time frames, being the 1 hour, the 15 minute, the daily, the 4, bada bing, bada boom. Yep. So again, I was telling you constantly, I was showing you on the higher time frame. These were areas you're looking for bearish trades. Again, I didn't start getting here trading until after 7:30, setting up, and then around 8 o'clock. So I had to sit on hands, do all this, popping up here. Tell you that shift we had occur here. That being said, you have multiple screens open, which I'm going to show you here. Oops, there. Multiple screens. So right now I'm showing you it all on one screen. 6 grids, multiple time frames. Down here, the daily, the 4 hour, the top right 1 hour, the middle 15 minute, the top left 5 minute. So if you don't have multiple monitors, then you may want to open up multiple grids. Or as I'm going to show you here, you have multiple monitors. And what's the most important? Well, is when I'm looking for entries, the 1 minute, this has its own monitor. Just some insight for beginners or those that have already been trading that want to understand my perspective, how I'm applying my methodology for trading.